Hi, this is Omar Dagestani. I'm a managing director of Stifel, and I'm delighted to introduce the $87,200,000 Indiana Bond Bank Common School Fund Advancement Purchase Funding Bonds transaction, Series 2019A, taxable. On page 1, you'll see we have a disclaimer that we ask that you review in full. Of note, all of the information provided in this presentation is accurate as of January 15th, 2019, the date of the preliminary offering statement. It's with great pleasure that we introduce our financing team. The Indiana Bond Bank is led by Mark Wallner, who is the executive director. Ron Mangus is the director of operations. Aaron Barnett is the compliance officer. And Brian Carmen is the program development director. The municipal advisor and cash flow verification agent is Crow. Angie Stino is the senior manager there. And Craig Lotz is the senior consultant. Bond counsel is Barnes and Thornburg. Issuers counsel is Hall, Render, Killian, Keith, and Lyman. Bank disclosure counsel, Frost, Brown, Todd. Underwriters counsel, Bose, McKinney, and Evans. The lead manager is Stifel, and we are joined by co-managers Fifth Third Securities, Mesro Financial, and Ramirez and Company. It is with great pleasure that I introduce to you the head of the Indiana Bond Bank and executive director, Mr. Mark Wallner, who will introduce the transaction for us.
Hi, I'm Mark Wallner, Executive Director of the Indiana Bond Bank. I'd like to provide an executive summary of the transaction that Omar introduced. The Indiana Bond Bank administers 8 programs, one of which is the Common School Fund Advanced Purchase Program, which facilitates capital to the Indiana Common School Fund for school corporation, construction, technology, and school safety. A little bit about the transaction. The Indiana Bond Bank's Common School Fund Advancement Series 2019A taxable, a par amount of $87,200,000. It's rated AA+ stable, no call provisions, and structured in semi-annual serial and term bonds with maturities from 2019 through 2023. Key security features, which we'll speak more of later, are listed there, and again, we'll go into that more detail throughout the roadshow.
This is Ron Mangus, Director of Operations with the Indiana Bond Bank. First of all, I'd like to provide you a brief overview of the Indiana Bond Bank. The Bond Bank was established as a separate body politic in 1984 and created under Title V, Article 1.5. The Bond Bank has no taxing powers. The Bond Bank's mission is to help local government borrow money. The Bond Bank structure is governed by a 7-member board in which the Treasurer of the state of Indiana is the chair. The Public Finance Director serves as a director, and the other 5 members are appointed by the Board of Directors. The outstanding debt of the Indiana Bond Bank is summarized with $800 million outstanding, in which just over $200 million is moral obligation eligible. Next, I'd like to briefly cover the state of Indiana budget and debt. The voters of the state of Indiana have approved the balanced budget amendment. Sound fiscal management has allowed the state of Indiana to maintain over $360 million in reserves, with total reserves of over $2 billion. In terms of debt, the state constitution limits its ability to incur indebtedness. The state has approximately $1.3 billion in outstanding debt, and the state's contingent liabilities are predominantly tied to the stadium and convention center expansion project.
This is Mark Wallner again. Thank you, Ron, with the Indiana Bond Bank. I'd like to speak a little bit about the state of Indiana's income and demographics. The state of Indiana has continued to see increased population growth, particularly with adults with college degrees over the last few years, with corresponding increases in income. Next, I'd like to speak about the state of Indiana's unemployment rate. Employment in Indiana is high. The state is well positioned to attract business and economic growth, and the state's low cost of living have combined to create an unemployment rate that is lower than the United States national rate. One of the reasons for the state's increase in population, increase in income, low unemployment is that the state has a very friendly business climate. The state is ranked 5th in the cost of doing business nationally, is ranked 10th for the best state tax climate, ranks 3rd for a favorable regulatory environment, and has a 2nd ranking in the long-term fiscal stability with top credit ratings and above average financial ratios. With that background on the healthy state of Indiana and a background about the bond bank, I'd like to talk a little bit about the Common School Fund and this particular transaction. Common School Fund itself is a constitutionally created fund which facilitates schools' financing for school building construction, educational technology programs, and school safety and security programs through loans. It's a multi-faceted program where agreements are made through the Treasurer of the state, acting on behalf of the State Board of Education and the school corporation, and the loans are payable from future state school support payments. The State Board of Finance and the State Treasurer administer the agreement. Currently, on school building construction program loans, the maximum term is 25 years, interest rate of 4%. Educational technology program loans, a term of 5 years, a 1% interest rate. School security loans for a 10-year term at a 1% interest rate. As mentioned, the Board of Education, Board of Finance withhold funds from the school corporation in order to repay principal and interest on the advancement. No portion of the Common School Fund balance is available to pay the principal and interest on the loans or the 2019A bond.
Thanks, Mark. This is Angie Stino with Crow. As Mark just described the purpose of the Common School Fund, I'm going to take just a couple slides to discuss the bond bank's role, which really is to serve as the conduit or more so the avenue to replenish the Common School Fund itself. Pursuant to statute, the Board of Finance is authorized to sell, transfer, or liquidate the advancement agreements to the bond bank. The bond bank, along with the Board of Finance, the Board of Education, the Treasurer of State, enter into the acquisition agreement, detailing the agreements and the amounts being sold to the bond bank. The bond bank and its financing team review the loan agreements and identify which of those agreements, really focusing on that principal and interest payments made by the school corporations, that would be best suited to securitize the bond bank bonds. The sale of the advancement agreements to the bond bank will not have any effect on the school corporations themselves. They will continue to pay the same principal and interest as stated in their loan agreements and existing amortization schedules. And as you will see in the table, here is a quick snapshot of the bond bank's outstanding bonds of approximately $74 million that are secured by this same type of revenue structure. What you see in front of you is really just a simplified flow chart of what I previously described. So on the left-hand side of the slide is really the mechanics prior to any bond bank involvement. So how the Common School Fund works is that the Common School Fund loans money directly to schools. They then, in exchange for those receipts, enter into a loan agreement that states the principal and interest, and that money then is repaid back into the Common School Fund. So a traditional revolving fund. Money comes in and it's paid back into the fund. And that would occur as if the bond bank, before they're involved in the transaction itself. Now moving to the right of the page. This really shows what happens once the bond bank becomes involved. And you can see here that the Indiana Bond Bank would issue bonds. Those proceeds are actually used to replenish the Common School Fund and used to purchase those loan agreements, really purchasing those revenues and that security. The loan agreements then, the principal and interest payments that are made by the schools, instead of reverting back to the Common School Fund, now revert and are used to pay the bond bank's debt service and its bondholders. And just a high-level overview of the security before handing the slides back to Ron Mangus, Director of Operations, I will briefly go over high-level what the four primary security features are. So the first one, the bonds are special obligations of the bond bank, payable solely from the trust estate. Number two, the Common School Fund advancements to the schools are repayable from the advancement payments. And again, these are from the state school tuition support withholdings. It is important to note that the tuition support is a line item in the state's biennium budget, must be approved and appropriated by the Indiana General Assembly. Third, the ability of the bond bank to pay the principal and interest on the 2019A bonds depends solely upon receipt by the bond bank of those advancement payments. And fourth, while the advancement payments are subject to biennial appropriation, the underlying security is best illustrated by the following four strong credit features that Ron will go into detail. The first being the acquisition agreement itself. The second is the prudent fiscal management of the program. Third, the timely funding of debt service requirements. And lastly, the estimated debt service coverage for participating schools.
First of all, I'll discuss the Common School Fund Advanced Purchase Funding Bond Security. The acquisition agreement provides the bond bank with full rights and title to all of the advancement agreements or portions thereof being sold by the Board of Finance. The advancement agreements permit the Board of Education and the Board of Finance to deduct advancement payments from the school's monthly tuition support payments. The acquisition agreement requires the Board of Finance, the Treasurer of the State, and the Board of Education to exercise the benefit of the bond bank, the maximum extent rights and options permitted under Indiana Code. In that, the withholding of funds of the state due to the school corporation that is party to an advancement agreement, also the collection of the amounts due from such school corporations by reason of being a party to an advancement agreement, and finally, the remittance of payment of such amount to the bond bank by reason of purchase and ownership of the advancement agreement. The bond bank has assigned its rights under the acquisition agreements to the trustee for the benefit of the owners of the 2019A bonds.
Hi, this is Mark Wollner again, Executive Director of the Indiana Bond Bank. Thank you, Ron. I will pick up on the second security feature of the Common School Fund Advancement Purchase Funding Bonds, and that is the state of Indiana's prudent fiscal management. It's important to note that the state of Indiana has a strong culture of prudent fiscal management and a strong history of that. In addition to the culture of strong fiscal management, there have been legislative actions in the state that reinforce that prudent fiscal management. On January 29, 2014, the state adopted a debt policy that limits total appropriation debt, including availability payments, to 15% of the previous year's revenue. In November of 2018, voters in the state adopted a balanced budget amendment to the state constitution, which now requires the state to adopt balanced budgets. And the third thing I'll point out is that in the enacted 2017 to 2019 biennium budget, there's an increase in education funding through the general fund of the state. So again, in total, that state prudent fiscal management, both on the culture side and then the legal framework, provides security for this Common School Fund Advancement Purchase Funding Bond. I will turn it over to Ron Mangus, Director of Operations, to talk about timely funding of debt service requirements.
The third security feature is the timing and funding of debt service requirements. Debt service payments for the bond bank's 2019A bonds are deposited with the trustee 15 days prior to the required July 15 payment date. For example, using the July 15 payment date, all events are structured with a semi-annual payment due on January 1st and July 1st. On July 1st, 2019, the trustee will transfer the school's entire July 1st, 2019 Common School Fund payment from the tuition support account to the state's general fund to the debt service sub-account of the Common School Fund. On July 1st, 2019, the treasurer will transfer the school's July 1st Common School Fund repayment from the debt service sub-account to the Common School Fund to the bond bank's trustee. The trustee will use these funds received on July 1st, 2019 to make the July 15, 2019 debt service payment on the bond bank's 2019A bonds.
Thank you, Ron, and I will speak about the last security feature. This is the coverage-based agreement selection. So it's important to note that the maximum annual debt service coverage for every individual school participating in this pool exceeds 2 times coverage. So debt service coverage is a minimum of 2 times, which allows the school corporations to receive that AA plus programmatic rating from S&P, and it's based on the state intercept mechanism. And so our team has reviewed advancement agreements against the total state tuition support dollars to ensure that there is that sufficient coverage to cover each school's annual debt service obligations. I will now turn it back to Mr. D'Agostani with Stifel to conclude the presentation.
Thank you so much, Mark. On page 17, we have a summary of the transaction. Today you've heard about the key security features, the acquisition agreement, prudent fiscal management, timely funding of debt service requirements, and the estimated debt service coverage. Below you'll see a table that includes the proposed amortization, the rating of AA plus stable from S&P, call provisions, and the purposes. We also include the key transaction dates. As indicated, the POS posted January 15th, price whispers January 22nd on Tuesday, IOIs on the 23rd, and the launch on the 24th. We expect delivery of the bonds on Valentine's Day, February 14th. As always, we welcome your participation in the transaction, and we encourage you to contact your salesperson and or any of the members listed here on page 18 with any questions you may have about the transaction, the credit, or the Indiana Bond Bank. Thank you for your participation.